will just be omitting instead of making noise to distract us. Alright, so I turn off the unmute until if you have something to say, just type in the comment section so I don't distract me. Alright, so 1 minute more. We're about to start. Alright. About to start. Okay, so this is so good morning everyone. So this is going to be a very brief session. I'm going to kind of do a market review, right? Kind of brief market review, right? And as usual, obviously we have to come in. Come in. Let me just do something. Come in. Still with you guys. I want to get something. All right. All right. So let me share my screen. Let me share my screen now so I can begin properly. All right. So we are on now. So first things first, the first thing you must always do is to check the news events. And obviously, you should know that you should not be trading now, right? Obviously, you should know that you shouldn't be trading now because we have a lot of news. We have PMI by 8:15, 8:30, 9 o'clock, 9:30. So obviously, you're not supposed to be trading now. So that you're supposed to allow all this news to play out, right? So I think the best time to be trading is maybe around 10 o'clock, right? After this 9:30 news is done, right? Then cannot trade, and then I have to also be mindful of this news by 2:45 p.m. Right? So always be mindful of news, right? Whenever you come to a day, always come to forexfactory.com and try to understand what the fundamental data is suggesting. Do we have something serious? So let's check Thursday. We have unemployment claims. No, there's no serious news again after today. So be mindful of today's news. We have serious news today. So if you're on card, we're having an interest rates, right? So you're dropping card interest rates today. Right, that's monetary policy report. That's what it is, interest rate. So I think the previous one was let me check what it was. I think it's not this one. I think it's the next one. Let's just get the interest rate reports. I think it's this one. Overnight rate. Yeah, it's this one. So yeah, that is the interest rate. So we're going to be getting interest rate for card. If you trade card, you have to start by 2:45 p.m. if you trade card, right? The interest rate, the previous one was 4.75, and the forecast is 4.5. So obviously, you have to stay out whenever you're having these news events, right? So if you trade card pairs, 2:45, stay out. But if you trade London pairs, EUG, it's best you stay out at 10 o'clock, right? You don't want to be playing around with all this news, you don't want to be playing around with them because just one, right, can really cost you a lot of money. Just one spike against you can really be crazy, right? So let's go to DXY. So DXY, you can see that DXY is just giving a very ranging structure. So if you go back in time, you can see I was actually expecting that DXY would push to this relative equal highs, right? You see why we're in the trading community, we just anticipate things, right? The market doesn't have to do what you want it to do. All right, so in my opinion, I was thinking that price was going to come for this volume imbalance here. I was saying price was going to come here because why we have this volume imbalance here, and not only that, we have this relatively equal highs here. So we have liquidity resting above this double top here. So I was thinking that since price was bullish, right, you see how price tapped into this other block and then it pushed up. I was thinking that price was going to run this liquidity high here. This was my target, right? If you watch my previous videos, in my opinion, I was believing that price was going to run this relatively equal highs and possibly push for this other block up here. Right, you can see how price, tapped into this other block, he pushed, gave a break of structure, and price did not do what I was anticipating, right? So this was my target, this place. So market broke down, right? So market broke down instead. So currently we are in a kind of we're in a kind of bearish market, right? We're in a kind of bearish market, right? In a kind of bearish market, and if you are paying attention, you can see that there is an imbalance here, which price has not tapped into. So we have this imbalance here that is overlapping with this bigger time frame imbalance. So if I zoom out, you can see that we have this bigger imbalance here, which was filled. You can see our price was playing around the 50% here. Price came, tapped the 50%, dropped lower, and then you can see our price is playing with this imbalance, right? So this is not really of interest to me right now, right? That is not really of much interest to me. Please, is my network breaking? Can you guys hear me? If you can hear me, just drop a comment in the comment section so I can know. No, I think my network is breaking. Can you guys hear me? Just type in the comment section if you can. Can you hear me? All right. So I think my network was breaking for a bit there. All right. So if you ask me, this is what I see. I see that DXY is likely going to go for this imbalance here, and if it comes there and it really wants to be bearish, then we can see price drop lower, right? We have this partially filled imbalance here. So this is what I'm expecting. Today's Wednesday. So price will likely go into this imbalance here today. That is today, likely go into this imbalance here, right? Maybe 50% of it. So for today, I think I'll be bullish, right? I think I'll be bullish for today, right? Seeing that this imbalance is this untapped me, right? So this imbalance is untapped there. So I think I'm bullish for today. Market should likely go up, right? You can see how this bullish order block is being created. You can see how price closed above this order block and then came back into it. So this order block is being respected. So if the order block is being respected, obviously it should drive for this higher imbalance here. So this is what I expect that DXY is going to do for today. It's going to likely, today or tomorrow, it's going to likely buy into this point. Now, I don't know the extent to which it can go, right? I don't know the extent to which it can go. But if I'm judging by this current range, let me just see how far I can go. So if I want to judge now, I can say, okay, from this point to this point, right? So this is a midpoint of this range, right? This swing high to this swing low, right? So this high to this low. This is the midpoint, right? And then if you look very carefully, we have another area that was not balanced here, right? And then we also have this bearish POI. This candle took a liquidity before breaking down. I can see how this push up happened, ran the liquidity to the left before going down. You can see how this push up happened and then price broke to the downside, right? So these are areas that need to be mitigated, right? This last up push, it needs to be mitigated, right? So it's logical to expect that price can possibly push, maybe do something like this, maybe bounce back and then come higher, right? Something like this. It might react here and then come to this higher point here. So this is going to be an area I'll be really looking out for, right? I will really be looking at this area here. I've seen that we have broken this low here. So we have broken this low. Right? This low has been properly broken. So I have a bearish break there. And judging by what I see here, that's what we might likely see. When I see price tap here and then drop. So this is going to be target, right? Especially this upper imbalance here. So for me, I'm bullish on DXY. And of course, if you go to the 30 minutes charts, right, 30 minutes chart, we are already below the Asian low. So being below Asian low means that we might be setting up for a buy already. Right, so we are below Asian lows. There's no imbalance down here. Okay, this tiny imbalance is here. Okay, so we only have this tiny imbalance here, but look at it. If you take your gun box from here to here, I think we have played 50% already. So if you take from this low to that high, we've already played 50% of this range, right? From that low to this high, we've already played 50% of the range, right? So it's likely that price, since we are below Asian low, these below regions are what we call Asian liquidity. So we're already below Asian lows, right? So since we are below Asian lows, it's possible that price can go higher, right? Of course, if you go to a 5-minute chart, you can see that we already have a bullish break. Right? Market has already given this bullish break. This swing high has been taken out, right? So we already have this bullish break, signifying that price might want to run higher, right? So of course, everything I'm saying here is not a financial advice, meaning that you know, we have different kinds of traders, right? We have people that are okay telling people take this trade, take that trade, but me, I'm not okay with that, right? All I can do is to teach you and tell you this is what I'm looking at, right? I'm not asking you to buy, I'm not asking you to sell, right? So that you can't, we live in a world where people do not want to take responsibility for their actions, right? They want someone else to be the one to take it for them. So if someone gives you a signal now and you take a loss, instead of you to blame yourself, or let's say take responsibility by doing what, studying to know what went wrong, you just simply say, this guy doesn't know how to trade. He was giving me wrong signals, right? So those are the kind of things I avoid, right? I don't want any problem, right? So the best thing I can do is what I'm doing here, right? Even my paid students, all I can do is to show you I'm expecting price to do this, right? I'm not going to tell you buy here or sell here, right? Because I don't want someone to blame me for his loss or his gain. Because one thing about signals is that when it starts giving signals, you can't go back. Because people now, if they take away now, they want to drop another one and then another one. If it's a loss, you begin to take the blame, right? I was on Twitter the other day. I watched a guy that has been giving signals since the beginning of the year. Most of his signals had been playing out, but just one single signal that he gave that did not play out, he was crucified for it. Meanwhile, other signals have been given have been playing out. So you can see how human beings are, right? Whenever something goes wrong, they want to crucify you. But when the signal was going right, they wouldn't say anything. So those are the kind of things I avoid. That's why even my paid students, some people have offered me money. Please, can you give me trades? I said no, I don't want any problems, right? So the best I can do is this is what I'm looking at. Use your own hand, look for your entry, and enter your trade. If it's a loss, you take it, you can't blame me. If it's a win, you take it, you can't blame me too, right? So it's all up to you. So everything said there is not a financial advice, right? So if you're looking for someone to tell you enter now, buy here, you're in the wrong place, okay? So just go and look for one of those signal guys. When they blow your account, then you can come back and come and learn properly, right? So the best thing you can do for yourself is to learn how to trade properly yourself. I don't depend on someone to tell you buy here, sell here, enter there, right? It's not sustainable. Right, so that's it. So now, if we are expecting bearishness for DXY, that means we should. So if you're expecting bullishness for DXY, that means EURUSD should do the opposite, right? Because they're inversely correlated. So let's now, since this, remember, this was we're expecting on this guy. Remember, we're expecting some kind of bearishness, so a bullishness on this. So we can now go to EURUSD and expect something opposite. Right. So remember, I think I kind of pondered. Wow, 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 wow. I think in the last time we had okay, this was okay. I think this was my private students. Right. I've seen the markup. I told them that price was going to drop for this imbalance. You can see how this was already marked, right? This was on Sunday with my private students. So we had a class on Sunday, and I told them that price was going to come to this imbalance down here. Right? Why? Because we have already taken out, we've blown out this high here, right? And then we have this imbalance here. So I think price was all the way up here. You can see the markup. Let me just show you guys the markup again. You can see how I marked it out. So market was all the way up here, and I told my private students that price was going to drop down to that point. And I told them to look for sales, right? And some of them did, some of them did not. So it's up to them. And remember what I told you. The best I can do is tell you what I'm expecting. I can't tell you buy or sell here. All right. So you can see how that happened. You can see how price blew this liquidity here, broke below this up candle. That created what? An order block, right? An order block was created there because market did what? Closed below. So when you're looking at order blocks, you're looking at the close price. Once price closes below an order block or an up candle, especially after it has taken liquidity or it has hit a POI, right? Those are the two conditions that make order blocks high probability. Either it takes out liquidity, like it did here, and then it now creates the other block, or it hits a POI, maybe an imbalance or something. So, but I like to see the liquidity. So market took our liquidity, now closed below, right? That is what makes it an order block. That closed below the candle. As price closed below this candle, what happened? Price came back here on Monday. You can see price pushed back into the imbalance and then dropped. Not only that, Watch this. Price blew out Friday's high. So you can see how Friday's high was there. This is what we call a turtle soup, right? So price took out the high of Friday, that is liquidity grab, and then do what? It took out the high, tapped into this other block, which what did the other block do? The other block do what? It ran liquidity. And the reason why we are expecting market to be bearish is because we have this imbalance that needs to be filled. So market did, you can see how these things lined up, right? And of course, my private students can relate. I told them this on Sunday in our private class that market was going to drop down. I told them this, right? You can ask them. The ones that attended, right? There were about, let's say, about 8 or 9 of them that were live in the call. So I kind of said it there, right? It was going to drop. So you can see how it did just like I said it would, right? So now, if the XY wants to go higher, that means we can logically expect that price will drop lower, maybe for this lower imbalance here. I have a lower imbalance down there. So if DXY wants to go higher, that means this guy is likely going to drop way lower. So let's get the range of this market. Let's just get the range. So if I'm getting the range, I can take, okay, from this swing low to this dynamic swing high, right? You can see that 50% is still all the way down here, right? And you know that 50% is where we expect price to react, right? Market usually react at 50%, right? Most times, market will move very smoothly until it gets to 50%, right? As market has not gone to 50%, it's going to likely move very smoothly, like very smooth until it gets to the midpoint of the range, right? So I can take this out, right? So this is likely going to be where price is going to. Let me undo that. What did I do? All right. So this is likely going to be where price is going to go. Right? Likely going to go for this lower imbalance, right? Which is below a 50% of this range. So we have this swing high. You can see this high took out this bullish range, right? So expect price to likely come down here. Right? It's likely going to drop to that point there. All right. So that's basically what I'm looking at for EURUSD. And of course, if you go to the 30-minute charts, wow, 30-minute chart already, you can see that we have already taken out Asian highs. Can you see it? We have taken out this Asian high. So market is likely going to drop off, right? You know, whenever we take out Asian high, it's usually what? Um, a, a setup for a sell. So you have taken out Asian highs. So market is likely going to drop. Let me go to the 1 hour charts and see something. All right, so the same thing here. We have this order block that has been printed. You remember what I told you guys? Whenever order block takes out a liquidity and then it's print, it becomes an area of interest. So now on the 1 hour, we have this other block that did what it took out Asian high, and then you can see how price has closed below, right? So this close below means that we have an area of interest for a sell continuation. So this has become an area of interest. So if price comes up here, you can look for sell confirmations, right? So you can look for sell confirmations once price comes back to that point, right? And don't forget that everything I'm saying is not a financial advice, right? I'm not asking you to buy or sell. If you do so, that is on you, right? I'm not asking you to do anything. So this is where I'm looking at. This other block, price comes in, you can look for sell confirmations, right? Wait for sell confirmations. So if you see, if you want to take it on a demo, you can take it on a demo. If you take it on your live account, you can take it on your live account. I'm not asking you to do anyone, right? Remember that's not a financial advice. All right. So let's look at another one. So GBPUSD, I think GBPUSD is also should be similar too, right? It should be similar, right? GBPUSD should be similar, but what I can see on GBPUSD is this. Let's scroll backwards. Let's just scroll backwards. All right, let's go to the back. So for GBPUSD, let's go to the weekly chart first. I think there's something on the weekly chart that we need to see. All right. Okay. So you can see that we are in a bullish market. Overall, we are in a bullish market. I can see our price, came, hit this other block, and then market is delivering to the upside, right? And then you can see our price has dropped to this weekly imbalance here, right? We have two imbalances actually. We have an imbalance there in between this candle and this candle. I don't want to mark it out. And then we also have an imbalance between this and this, right? So now let's see. So let me just measure something. I'm coming. All right. So we have an imbalance. We have an imbalance here, which price has tapped into. We also have a lower imbalance here. So it's logical that price might want to come for this lower imbalance, right? But I think that EURUSD is cleaner, right? If you ask me, I think EURUSD is cleaner. I think I'll be focusing more on EURUSD because GBPUSD is it's not very clear. We are already inside an imbalance already, and now we have taken out the previous daily low. This is crazy. We have taken out the previous daily low already on EURUSD. So, and we can say EURUSD, so GBPUSD did not take out Asian high. So you can see that there's actually a kind of issue here. Look at Asian high here. GBPUSD didn't take it out, right? Instead, it went for Asia, it went for the low. So I think that there's the market to focus on should be EURUSD, right? So you don't want to be chopped up, right? So I think it's just best to avoid this one and focus on EURUSD for sales, right? I think you should avoid this one. Just avoid this one and focus on EU for sales. I think EU is the one that's cleaner. And I see EU, you can see how EU has taken an Asian high, and now we're expecting price to take an Asian low. So if price retraces, we can expect market to drop for this Asian low, right? Most likely, market comes to this other block up here, you can expect price to drop for the Asian low, right? So something like this might happen this morning, something like this, right? Something like that, right? And then we can now look forward to going for our lower areas of target, which is for this 50% of this range. Remember, we have the 50% of the range, right? And then this lower imbalance here, right? So that's basically what I see on this guy, right? So GBPUSD and EURUSD ties it. So for me, I think EURUSD is cleaner, and that's where I'll pay more attention if I see an opportunity. All right, so that is it. That is it. So for USD CHF, let's go to the weekly chart. So USD CHF has just been very, very rangy. You can see how packets, I think I marked this all the way. So you can see how price took out this inducement, right? Tapped into this other block, dropped off, took out this inducement, hit this rejection block here. So that a rejection block here, inside there. Markets came, hit that rejection block, and hit that rejection block, and dropped lower. Right, someone said we'll check USD card. Okay, we'll check USD card. Although I don't trade USD card, but I think we have news today. So let's just see what USD card is going to do. But personally, I don't trade USD card. I don't think you have interest rate today. So I think it's best you wait for the news to drop off before doing anything, right? But we'll still look at it. I think it's best you wait for the news to drop first, because market is going to really, really be consolidating now. Right, so I'll check that after this. So what do we have here? So I've hit this inducement sperm, and then let's see where we are. So if you take out this range, if you want to get the range now, so from this range high to this range low, you can see that we have 50% down here. So market can still choose to drop off, right? So we can still choose to drop off. Can still choose to drop off. Right, look at this other block that was created here. Look at this other block here. This last up candle. This is another block, right? So, all right. I like the open more. So this is another block. Market can choose to push back higher. And then I don't know. This guy is really, really choppy. Let me check the daily chart and see. So daily charts, we took out this high, and you can see the same thing I told you. That I just told you guys now. You can see immediately this candle took out this high. What happened? We made an other block, right? Can you see what I've been telling you guys? Look at this other block here. Watch this. As price took out that high, what happened next? It closed below it. So we took out this liquidity, made another block, closed below the candle. That makes it another block of interest. That's what I've just been telling you guys from the beginning of this class. Market went below this other block after it took out this liquidity. After, not before. After it took out liquidity, it closed below, came back, and then dropped down. This is what we call a turtle soup. It's an A plus setup, right? When market does this, it's very A plus, right? And then you target for the lows, right? Or either you target the lows or you target the midpoint. That means you take your fib to what do I mean by midpoint? So instead of maybe holding trade too long, cannot target the midpoint. So you take out your fib to from this low to that high. So you just simply, the market takes that, you just target the midpoint. You sell inside the other block and target what? The 50%, right? So instead of maybe targeting the low, because price might reverse before the low, so you can just simply wait for market to come back into the other block, look for sales, and then target the midpoint of the range, right? 50% of the range, and you're out, right? But if you want to swing, you can take partials there and then hold for the overall low. So for now, I cannot really see anything of interest on USD CHF. Well, I can't really sense of interest. It's not really clear to me. It's not clear to me. Nothing is really clear on USD CHF. So it's just best to stay out. So you want to see trades are very obvious. I want to see a trade that's very obvious. Right? I don't think that guy is obvious. Let me just look at USD card. Let's use Forex.com. So someone said we use USD card. So weekly chart, I don't trade USD card, obviously. That's why you won't see any markup here. I don't trade USD card. Someone just asked that we check, we go through it, right? So quickly, you can see that what do we have here? I can say market is, let me see. All right. All right. Okay. All right. Wow. I'm seeing something now. Look at this high here. We have this relatively equal high resting here. Relatively equal high rest. So I have relatively equal high. We took out buy side liquidity. Sorry, sell side liquidity downside. And now we have this relatively equal highs here. Right. So this is the card overall view. And if you can judge by structure, you can see that we're in a bullish trend. Market broke above this high, right? We broke above this high, came back, tapped into, I don't know what was here. Okay, this rejection block here. So tapped into this rejection block here. And then we made a new high, right? So this is a monthly chart. So in 2010 or 12, we tapped into it, made a new high, blah, blah, blah. So what do we see here? What do we see here? All right, so we have taken out, okay, I have 10 minutes more before the call ends. So let's just use the 10 minutes judiciously. So we have taken out this liquidity pool here, and now we have this relative equal highs here. So it's logical to expect that price will run higher, right? It's logical that's why price is going to run higher on the overall term. And then if you look at this imbalance here, we have this fair value gap here, right? So watch that. So we had that gap there. You see how price is playing off that fair value gap. So daily charts, let's go to the daily. So daily chart is what do we see here? But you can see the same thing is occurring here. We grabbed liquidity to the downside, took out all these lows here. You can see. See, okay. It was not really clear. I think this is the one we should look at. Took out this liquidity pool there. We left this one for whatever reason. So we took out the liquidity pool and then so if you ask me, this guy is bullish. Seeing that we could not take out this low, right? You can see how all these lows were respected. You can see this low, all these lows have been respected, right? So if you should ask me, I feel that this guy is bullish, right? So this is where I'm looking at USDT going, right? Should likely go for this high, right? This is a high of interest. So markets should go bullish on USDT, right? Seeing that we're taking a liquidity pool to the downside, and now you're pushing higher. So this is just logical that price should go here because I can't see any reason why price should not go higher. Right, so we have this liquidity here, we have this liquidity here, we have this liquidity here. Now we have a trend line too. Look at this trend line. Watch that. So I have this trend line liquidity resting here. All right, so I have this trend line resting here. Look at this liquidity pool as well. That's liquidity. So we have this trend line resting here. Right, so market is likely going to push either for this trend line or that relative equal high. So that's what I expect for this guys bullish. So maybe intraday charts, that's 30-minute charts. Let's see what we have on 30 minutes. So 30-minute charts, obviously, even though we are bullish, we might want to see a little retracement, All right, so this is the last swing low, swing high. This last swing high, last swing low, and market is just doing its own thing. It's just been impulsive. So wait for a proper retracement. I prefer below this Asian low. Now I've taken Asian high. Just wait for price to drop down, right, to give you a good retracement before entering a buy. Right, wait for a good retracement. Right, so using the 1 hour chart, we have this high, we have this low. So this is your current trading range. We have this swing low here. So we have this swing high here. So we have this swing high, and then that is the swing high there, and then we have this swing low. So this for USD card. So I have this swing low here. All right, so let's see. If you take your two and want to get the midpoint of this, all right, so midpoint is somewhere around there. All right, so you want to see price at least retrace to at least this point here before looking for buys. All right, you want to see price retrace properly before looking for buys. And you don't want to. I can see this other block here, which has not been mitigated. You have a kind of PUI here that has not been properly mitigated, and then we have some kind of, oh my god, see imbalance there. So this imbalance will be a point of interest. There's an imbalance between these two candles, right? So this is a POI. We have this POI here. This POI, it ran liquidity, it took out this liquidity and then pushed higher. So this is a kind of unmitigated POI, right? Kind of unmitigated POI here, right? So want to see price drop at least to this point before doing anything, right? So that's where if you for take USD, I want to see price drop down there. Right? Nothing again. But nothing. I don't have any business up here. Let price give a proper retracement before looking for buy opportunities. All right, that's what I have for USD card. All right, so let's look at the final one, which is gold. Right, many people love trading gold. So gold. So is this clear? The things I've taught so far is it clear? I have 5 minutes left. So the things I've said so far, are they clear? If it's clear, just type in the comment section that it's clear. Things I've taught so far, they clear, they clear, they clear, they clear. If it's clear, just type in the comment section so I'll know that you have some things have been clear for you. Is it clear? All right. So gold is trickish. Right? Gold is very, very trickish. Now, just looking at gold, we have a few minutes, like we have 5 minutes and 14 seconds. Right. So now for gold, what do we have here? We have taken out buy side liquidity. We made an all-time high. Right, last week. We think I made an all-time high last week, an all-time high. So quickly, let's look at gold. So taking out an all-time high on gold, and we have a level of interest here. We have this level here, this 2500 level. This is what the bank number. I don't know if price is going to go there, but pay attention to 2500 level. All right, coordinate 2500. This pay attention to that 2500 level. Price might want to go there because price likes to go for those kind of round numbers. That's a bank number, right? Pay attention to that number there. But seeing that price ran this liquidity and gave this strong rejection. Let me see something. Let me check something. Right. Okay, I see. So we've already had a CROT there. Okay. So we have taken a liquidity pool. Two things can possibly happen. Now we hit this imbalance here. Right? If gold wants to continue buying, since we are seeing that price is already rejecting from this, we have already taken out the previous weekly low, and we are playing off this imbalance here. So this might send gold up to this point. It's possible that gold might go up to that level there. It's very possible that gold might go there. Very possible that gold might go for that 2500 level, right? There, but on the daily chart, we can see how price is playing off this other block here. This was the last down close candle before this impulsive push. Although I would kind of trust this one more. I'll kind of trust this other block more. Okay, this one was already mitigated by this candle. So, although I would trust that I would trust a lower push more than this. Let me see something. If I was to take out to get my trading range now, I would say okay from this low to that high. You can see I've already hit 50%. So gold is just buying. So it's possible. Now let's look at something. This candle took out liquidity and price closed below, right? So pay attention to these two. So this might be an area of interest. If market wants to sell, right, pay attention to what market does here. So this gold is like it's twofold now. Gold has two possibilities, right? Since we have taken this previous daily high and we have all this liquidity resting, look at this. 1, 2, 3, 4. This trend line is resting here. So since we have taken out this buy side liquidity, it's possible that gold might sell off from this other block here. Remember I told you guys that price, once other block takes a liquidity and close below, you can look for rejections inside it. So once gold gets inside here, you can expect price to react, right? Because this there's an imbalance down here as well. So which imbalance has not been tapped into, right? It's left clean. Has not been really dealt with. So there's a possibility that gold can do something like this. Something like this. Something like this. And then drop lower. This is a possibility on gold. All right, so for me, once price gets to this other block, I will be waiting to see if it will give a bearish confirmation, right? Right, and remember what I've told you guys. This is what I have for gold, right? I feel that gold might reject it. If it doesn't, then we'll go for level. So it's two possibilities: either gold buys or sells. When price gets to this point here, wait for market to give you confirmation for what? For a sell. If it doesn't give confirmation, then expect price to go for this 25K level. So these are the two possibilities on gold. Either it does this, or it just goes for this high, right? So, but to be wise, wait for the market to give you a confirmation, like a bearish confirmation. Don't do anything until you get your confirmation, right? So let's wrap up there. So remember what I said, everything is what not a financial advice, right? Don't do anything without doing your own proper research, right? Nobody's asking you to buy or sell. Whatever you do is solely your responsibility, right? So you can't blame anyone for your failure or give anyone credit for your success, right? So that's all we have for today. Right, my time is already up. So have a wonderful day. See you guys whenever, right? If you want to join our paid mentorship, we are currently sending 30% discount, right? 30% discount. You can always send me a DM to join our paid group. We have classes every Sunday, and then you can get direct guidance. So if you want to join the paid group, send me a DM, right? 30% discount. Guys, yeah. So guys, have a wonderful day. Cheers, and God bless.